And let's talk about Ethereum Classic. Ethereum Classic's rally is consistent with its record of rallying around major Ethereum upgrades, one observer said. July has brought relief to the crypto market with Ethereum Classic, the supposedly dead coin and not so similar clone of Ethereum's Ether token, and other out of favor coins like Uni and Matic lead the recovery in digital assets with at least 1 billion market value. ETC has added 184% this month, while scaling solution Polygon Matic and decentralized exchange Uniswap have gained 102% and 86% respectively, CoinDesk data shows. Industry leader Bitcoin had added 20% and in Ether 60% at press time. The total crypto market capitalization has rebounded $1.14 trillion from last month's $762.82 billion low. That's actually pretty incredible. Let's talk about my thoughts on this real quick though too, because we have two very interesting plays here. The biggest gainers being essentially Polygon and Ethereum Classic, both pertaining to Ethereum and both pertaining to Ethereum's failures prior to this upcoming merge, right? This is very important to pay attention to because Ethereum Classic is, like we've talked about before, the original kind of chain. It stayed around after the DAO hack. Now what Ethereum did and what they have a history of doing is reversing transactions essentially due to the hack so that they could keep the chain going and line their pockets, etc. And that is when they really decided to break away from their motto, code is law. A lot of people had a lot of problems with this, and you ended up having a split in the chain. This is also why you saw them implement the difficulty bomb, because they don't want another split of Ethereum to happen that is even closer to what Ethereum is like right now. Meaning that by putting in the difficulty bomb, they dissuade miners from forking the chain a second time. And that is obviously coming up to the merge. So miners are looking for another option, right? Another option to continue generating revenue. And that other option, especially from an Asics perspective, is going to be Ethereum Classic. And that is why we are seeing an Ethereum Classic pump, along with other reasons like we've talked about earlier this week. You can go review those if you like. That being said, the other one that's extremely interesting is Polygon Matic. Now, obviously, we talked about Polygon Matic being very close to ZK rollups, along with some other scaling solutions that are getting close to ZK rollups. But it's kind of the ubiquitous one. It's the one that's being used the most as far as scalability solutions for Ethereum. Why is this? Well, it's because of Ethereum's failure to actually add any sort of scalability with the merge. Now, originally, Ethereum was going to basically, with the merge, release Ethereum 2.0. They were going to have sharding, and that was going to basically provide scalability for the Ethereum network. But that is no longer happening. So why are we seeing Polygon Matic surge? Well, because they're close to ZK rollups, and because, of course, we aren't getting scalability solutions from Ethereum themselves on layer 1. That is why we are seeing both of these things happen. And it all has to do with essentially Ethereum's own failures. And this is the market responding to that, best I can tell. As far as Uniswap goes, I mean, Uniswap in general is going to be where you do most of the DeFi, etc. And so seeing it gain along with everything else kind of makes sense because that is where people are interacting with the market. Industry leader Bitcoin had added 20%. We already did that. Analysts said coin-specific factors are at play alongside broader market risk reset. And this is where things get interesting too. It's not necessarily a decoupling at this point. I'm not going to call that. But you have Bitcoin dominance. That has been a term that has been thrown around for a long time, where essentially you have Bitcoin and the price goes up on Bitcoin and the price of everything else follows it. Now we're kind of seeing some of these large coins and large projects kind of break away and go up higher than Bitcoin itself. And this is just a relevant factor because you want to pay attention to that, because if it does decouple, then you end up having a different investment strategy. Whereas traditionally, it's not necessarily ill-advised to go ahead and put most of your mining rewards into Bitcoin with the thought that, yes, it's not going to have those huge upswings that some coins have, but for the most part, because of its market dominance, it's a safe investment in the crypto market specifically, right? And that's not financial advice, of course. ETC is being driven by speculation that ETH miners will go to ETC and potentially there could be another hard fork benefiting them. Now, I don't think that there will be another hard fork because the difficulty bomb has already been set and going off. That being said, it's not necessarily completely impossible that Ethereum could hard fork and somebody could defuse the bomb. That is a possibility. I don't see that actually happening, but I guess that could happen in theory. The driver for the move is Ethereum's impending merge, combining the network's proof of work blockchain with a proof of stake blockchain called the Beacon Chain that has been running since 2020. After the merge, likely to happen on September 19th, Ethereum will start operating as a proof of stake chain, requiring market participants known as validators to stake or hold a minimum number of coins to confirm transactions in return for their rewards. In a proof of work system, miners solve a computational problem to verify transactions. The merge means Ethereum miners will have to find a new home, most likely Ethereum Classic, which is supposedly the only chain compatible with Ethereum mining machinery. Specifically, Ethereum mining Asics. Now, if you're on GPUs, there are a lot of other coins to go to, right? Ethereum's mining network is made up of two types of hardware, ASICs and GPUs, in a research report. The problem with... They had to do a research report. The problem with ASICs is that they can't be repurposed for different applications besides mining ETH. Ethereum Classic is the only other proof of work coin that can be mined with an ETH ASIC, since its hashing algorithm is compatible with ETH's algorithm. Sorta, kinda, right? It's ETC hash now. It's close enough to where they were able to do firmware upgrades to the ASIC miners for you to be able to continue to mine something post ETH. Recently, Antpool and Bitmain affiliated mining pool invested $10 million into supporting Ethereum Classic ecosystem. Ethereum Classic is a hard forked version of Ethereum born from a hack of the DAO, a smart contract operating on the Ethereum blockchain in 2016. ETC's July gain is consistent with a history of rallying around the time of major Ethereum upgrades. ETC's April 2021 rally coincided with Ethereum's Berlin upgrade. Similarly, ETC seems to be rallying on the back of expectations related to the merge. Toronto-based crypto platform FRNT Financial said in an email, adding that investors may see ETC as a hedge against potential difficulties in the change, and I do think that is true. ETC was priced at a 3.5-month high of $45 on major exchanges earlier today. I think it's down to 42 right now. So obviously, I think they covered all of that. We kind of covered it as well for the Ethereum Classic perspective. Ethereum Classic, once again, not only is it a miner-driven thing, but it's also a development-driven thing and a retail-driven thing, right? So because you are still on Solidity, because you still use EVM, because the retail users can still utilize MetaMask to connect, there is a lot of potential where if something goes wrong with the Ethereum merge, developers and retail users can move to Ethereum Classic pretty seamlessly, right? They'll be able to transfer everything over to the EVMs seamlessly. The users will be able to connect their MetaMask to the network very easily and participate within DeFi or NFTs just as they would on Ethereum. So there is also those factors for Ethereum Classic. So if something went wrong with Ethereum, there is that potential. Let's get into Polygon though. Matic seems to be reaping the rewards for Polygon's expansion plans and partnership announcements. The scaling solution earmarked $20 million to help projects migrating to its platform from the Terra blockchain. Disney said earlier this month that Polygon was one of the 6 companies selected for a business development accelerator program. Furthermore, Polygon said it was building a ZK EVM, which we talked about earlier, or a zero-knowledge system, in a bid to slash transaction fees by 90% in comparison with Ethereum. According to FRNT Financial, the ZK EVM plan has added to enthusiasm in the ecosystem. Polygon facilitates faster and cheaper transactions by running sidechains or tangential networks alongside the main Ethereum blockchain. Scaling refers to increasing the system's throughput as measured by transactions per second. Matic neared $1 early Friday, the highest since May 9th. Now, I am not actually clear completely on why Uniswap is pumping, so we are going to read this part, but Uniswap is just basically a DeFi solution on Ethereum, right? While Uni is not the only decentralized finance association token to rally, its outperformance may result from the Uniswap community's decision to approve a fee switch proposal that directs a portion of trading fees to the Uni holders. Once the proposal is implemented, about 10% of trading fees could go to Uni holders, according to Ian Solot, a partner at crypto hedge fund Tagus Capital. Currently, they do not get any share in the protocol's revenue, contrary to Sushi token and CRV token holders. The entire amount collected from the exchange's 0.3% trading costs goes to liquidity providers. Uni holders voted overwhelmingly in favor of the proposal. Now it's a question of implementation. It looks like it would be 10% of trading fees, estimated at 20 to 40K per day for the Treasury. Obviously, this has a positive impact on the Uni token, Solot wrote in Thursday's daily market update. Uni was changing hands at $8.90 at the time of writing, having touched a 3.5-month high of $9.84 on Thursday. Now, I don't think they should be doing this. I always think the validators, the liquidity providers, the miners should be the ones that get paid attention to and focused on because they put the most at risk. And these kind of monetary policy changes to benefit people that do less work but have more capital is extremely frustrating, and I don't agree with Uni doing this, and I think that it's a terrible monetary policy change, personally. Okay, so now that we know it, I'll give you my opinion on that. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.